Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar roller coaster ride isn't over yet after ending a turbulent week, seeing wild market swings following the collapse of Silicon Valley Bank to Credit Suisse need for a lifeline, while the rebound didn't last long for First Republic Bank. After reversing Thursday gains, the market sank on Friday to negative 33%. Bringing the total share tally to around 71.8% loss. Now, with having the market taking the challenge to the top side, we didn't see any clearance to that key level of 67.1535, and from there the market is still somewhat apprehensive in taking the challenge higher. With technicals weak, could actually see this level fail again if re-challenged and therefore look back towards the bottom side of the range, seen at 65.90, as all eyes look to the US Fed, which is poised to approve a quarter-point rate hike this week. So no doubt the markets will be keeping a very close watch on the dollar index, which measures the greenback strength against a basket of six major currencies as it trades around 103.50. Well, the dollar outlook for the US, the market is attempting to recover from its recent pullback, and therefore we're seeing very whipsaw price action for euro, and now currently trading around 106.60. I feel that there is much determination in the bulls at this stage, as the market is trying to reclaim that top side level of 106.85 or around 107.15. But I feel that from that heavy engulfing candle and two inside trading days, may see another down test and watch that dollar rally back to 104. However, all eyes will be on this week's US rate decision, and as I mentioned, 25 basis points is expected, so no doubt it's all on the statement on how hawkish will Fed Jerome Powell come across, especially with the banking crisis. Talking about banking crisis, well, safe haven demand was right across the board with Japanese yen and also spot gold. But looking at Japanese yen, the market's taken out 132 and now poses a further threat to the downside and looking towards as a potential target of 129.80 to 130.15. With the break here and also heavy technicals gives little upside potential, and also the recent posted hammer has been negated. Looking at sterling, well, the market took another challenge to that top side around 122 and failed, and dropping back rather sharply. But the technicals are somewhat mixed. I feel we're still locked in this range somewhere around 119.65 to 122, and with the risk of another failed upside attempt as we look towards Super Thursday, with the Bank of England expected to raise rates by 25 basis points. It's going to be another roller coaster ride, and no doubt we will see both the ranges of 119.65.75 and top side of 122 be repeated. A very big candle here, and a Marubozu after the market surged 3% and posted an 11-month high, as safe haven demand has completely grabbed the markets for gold as it rushes now towards a 2,000 handle. I would like to point out that the market is extremely overbought, even though the trend is strong, and we could see this all turn around sharply, but not quite yet. So I feel we may see another upside challenge around that 2,000 mark and reassess. And finishing up with oil, well, the market plummeted lower and still keeping a very close watch on its target of $64.50. We are oversold, but the ADX is supporting a bear case, and this Dragonfly Doji has now been negated due to the outside range day. So therefore we are looking further to the downside, and as I mentioned, to a target around 64.5. Well, that wraps it for today. Thank you very much for joining me, and as always, look out the interest rate report. I hope you enjoy the great start to the new week.